All right, in this lesson, we're going to go over the audit process. So we talked in a previous lesson about, what are the things that an auditor and a manager does, and how does audit fit into that picture of what management does. In this lesson, we're going to talk just about audit. So, at the end of the day, what we're going to learn in this lesson is everything else that we're going to learn in auditing. So everything else that we're going to learn is going to be based on this information. So we're kind of giving you a preview, or as I said in the last lesson, a 20,000 foot view of what you're going to be learning in auditing. So this is everything that we're going to be learning in the next few lessons about auditing. This is what we are doing as auditors. So these are kind of the phases or the audit process, okay? So the first thing that we're going to do, and I want to actually start out by saying that even though there's kind of like a hierarchy of this is what we're going to do first, this is what we're going to do second, and so on and so on and so on, really some of these things can be done at the same time, and they don't actually have to be done in sequential order. So keep that in mind as we're going through this, and as you go through your audit career, you're going, hey, wait, it's not necessarily in sequence order. We can do some of these at the same time, or maybe one person's working on this and another person's working on something else, okay? So these are kind of the audit process. First and foremost we need to do is figure out if we're going to accept the client or we're going to continue with our current client. And I know that might sound a little bit strange. Hey, they've been our client for 10 years. Do we really need to evaluate whether or not we want to continue our relationship with them this year? And the quick answer is yes. And the reason why you want to do this is because of something that we just talked about in the last lesson, and that's audit risk. Okay? In each engagement, every single year, there's some type of risk of doing that audit. Well, if the client's financial stability has been going down, 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 and they've been more creative in how they do accounting, you're now exposing yourself to more risk than before. And so you may decide this year that we're not going to continue with the client and we're going to fire the client because there's more risk involved and we would have to charge more money, and they wouldn't be willing to pay that more money because they've been hounding us about our fees every single year. So it's better that we don't take on the risk this year than to take the risk on to make that extra money, okay? So in client acceptance and continuance, we're trying to understand the entity as well as the engagement risk. What risks do we have for doing this engagement, okay? So first part of the audit process at the very beginning is we're going to look at client acceptance and continuance. Do we want to accept the client, or do we want to continue our relationship with a prior audit client, okay? Once we kind of do that, then we look at preliminary engagement activities. Some of the things that we do in preliminary engagement activities include the audit engagement requirement. What are the requirements for us to do this audit? So, for a client that we've had for 4 or 5 years, we kind of know what the audit requirement is as far as, people and industry and knowledge and all of that. But for a new client, we might not know what our audit engagement requirements are. And so I just kind of mentioned I rolled off a few of the audit engagement requirements, but let's say expertise. So we've always done retail stores, and we have this client that's a manufacturer. Do we even know how to do manufacturing? Do we even know what to look for in manufacturing? Do we know what the risks are of being a manufacturer? And if we don't, it may be tougher to get in that industry because we're going to have to assume more audit risks. So there's going to be a risk that we're going to miss something because we're not experts in it. So that's why you see a lot of firms have expertise in a particular industry when it comes to their audits, because they know that the best. So they like to specialize in, okay? So do we even have the necessary requirements? And then people. Do we have enough people to do what we need done on that audit? And remembering that audits typically happen within a 3 or 4 month window every single year, January through March, unless we have, fiscal year ends. But do we even have enough people for that period? And if we don't, do we need to hire more people? What do we need to do? Just because you don't have all of the requirements doesn't mean you can't accept the engagement. You can always get the requirements while you are doing the engagement, but sometimes some of those requirements are a little bit harder to get during the engagement, and it's better just to move them on to another auditor who does have the proper requirements. We also will look at independence. Are we independent of the company that we're auditing? So We're going to look at independence from the issue of a partner or the individuals that are going to be working with the client. We're also going to look at it from the firm view. So if we're a large firm and let's say we have investments in the company for maybe not on purpose, but we just do have investments or we have business relationships with that company already, then maybe we need to step back and say, are we independent in respect of that client? And if we aren't independent, how do we become independent, and what's the cost of that associated with the fees that we're going to get from the client? And then we're also going to issue an engagement letter. And in this preliminary engagement activity, we want to be very clear with our client what our job is, what are we going to do, and what their job is. So we want to make sure that our clients understand we are going to give a report on reasonable assurance. We're not going to give absolute assurance. We're also going to need these documents, access to these documents, and we're going to need access to this, and we're going to need these resources. But in return, we need their cooperation to do everything that we've asked them to within a reasonable time frame and a reasonable request. So once we do all of that, then it's starting time to plan the audit. And like, here's an example of where we can have both of these going on at the same time. You have the engagement partner that's working on this stuff, and you have the manager already starting to plan the audit. Because if you know you're already going to assign the client, then maybe in the background you have the manager already looking and planning the audit, planning the resources, planning all of that. Those are things that you don't need the client for yet, but it might be better to get a head start with so that when you do sign the engagement letter, you're already up and running. Okay? So planning the audit, we're going to look at business risk. What are their risks? So we're not looking at our risks for doing the client, but what are their risks? Well, they have a risk of theft, or they have a risk of damages, or they have a risk of doing complex derivatives that they sometimes don't even understand. So what's their own business risk? So we're just looking at their company so that we know where we need to look at first. Okay? Materiality, we're going to look at materiality. We're going to set materiality for the company based on their financial information that they've provided to us and based on our professional knowledge of auditing that client. We're also going to look and see, do we need specialists for this client? So for instance, we may have a situation where we're working with derivatives, which are very complex insurance policies, and these derivatives or complex items or financial instruments would be a better term instead of insurance policies. These derivative financial instruments may need a specialist on our side so that we can have that specialist understand what they're doing. Because me as a general auditor may not have the expertise or the experience to actually figure out what these derivatives are. So we're going to hire a specialist to do that for us, or we're going to call in a specialist from within the firm. And then we're going to look at what's the ability of fraud to occur in that company, and that's when we're going to hone a lot of our audit and our audit planning process to make sure that we can control where fraud might happen and how fraud might occur. And then also telling our own audit team what to do in situations of suspicion of fraud. And then we're going to consider an audit internal control. So once we kind of have that going on, and again, same thing here. We might have a manager that's planning the audit, but we might also have a senior and first year that is considering the audit and internal controls. Okay, so they're already doing that while the manager's still planning the audit, which can be done because we're not over here yet. Okay, so consider an audit internal controls that helps us assess risk and identify areas of misstatement. If we identify areas of misstatement, then we know where we need to concentrate more of our time with. Now again, with auditing of internal controls, that helps us figure out what the nature, timing, and extent of audit procedures. If we can rely on their internal controls, then maybe we don't need to test those internal controls or test the outputs of those internal controls as much as it's something where the internal controls aren't working well. We're going to have to test that a little bit more. So helps us with nature, timing, and extent of audit procedures here. Once we've done all of that, then it's time to audit the actual processes, the business processes, the actual transactions, the related accounts, and the financial statement. And so we're going to apply our audit procedures to that. So that's the actual bulk of the work that we're going to do. We're going to go test things. We're going to find evidence. We're going to evaluate that evidence, and then we're going to come to some type of conclusion on those balances. Then we're going to complete the audit. So we're going to go ahead and assess or address all the issues that we had. And again, we'll be addressing issues as we go through it. So it's not like we're going to hold all of our issues and then at the end we're going to spit them back out. As we go along, when we find some issues when we're doing the actual audit process, then we're going to address those issues. Some issues, though, have to wait till the very end so that we can aggregate them and see, does it make a difference? Is it over materiality? And so that's the time where we're going to address issues. We're going to try to find any undiscovered items, so things that, even though we're doing a great job of this audit, there might be things that are being hidden from us, and we have to find a way to find them. We'll also look at any contingent liabilities or lawsuits that they might have that aren't financially driven right now because it's still pending, but we're going to try to take a look at them before we issue the financial statement, just in case they have an impact on this year's financial statements. Once we've done that, we're going to take all of our results, evaluate them, and then once we've reviewed our work, we'll issue the appropriate reports. Okay, so we're going to issue the appropriate reports based on the evaluation of results. And we said before, kind of, sprinkling in a little bit, we may issue a clean opinion or unqualified opinion. We may issue a qualified opinion, which is a clean opinion, except for this part. We may decide to issue something called an adverse opinion or a disclaimer, disclaiming all the work that we've done and disclaiming everything about it. Do not rely on that because nothing's right. Okay, so those are what we're trying to do. So in the audit process, again, we can do these in sequential order, but they're not necessarily all sequential order. We can do any of these at any time, but some of them are better first than some else. Obviously, you can't issue your audit report without doing everything above it, but we can do some of these in parallel of each other. So client acceptance and continuance, preliminary engagement activities, planning the audit, considering the audit and internal controls, audit the business process and related accounts, and then complete the audit. Then once you've done that, review all of your findings and then come up with a result and then issue an audit report. So again, that's the 22,000 or 20,000 foot view of auditing. In the next lessons following this, we're going to look at each one of these sections more deeply so that you have a better understanding of the audit process and what we're trying to do as auditors.